Hello and welcome to the paid weekly recap for the week ending April 24th, 2026. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel, and the creator of the artificial intelligence behind the paid system. Normal disclosures before we get started: options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. I also urge you to read the characteristics and risks of standardized options available at the highlighted link, and if you need more time with the disclosures, please go ahead and pause the video now. Otherwise, we'll get into the week. The 10-year yield drifting a little bit higher this week. There's been some concerns that things wouldn't get worked out with Iran, and then we had a meeting scheduled in Pakistan for the weekend. And then over the weekend, we didn't. So right now, the market is still digesting and considering what happens with Iran, knowing that it just seems to go on without any real progress. And in spite of that, the market does continue to show bullish behavior. We get a little pullback on Tuesday, end on all-time highs on Friday. The expectation of the meeting was enough to push the market higher, really driven by tech. And you can see here the tech really exploded on Friday. Semiconductors absolutely getting a ton of money flow. We've got an RSI at 75 for tech, very overbought. Doesn't mean bearish, it just means that this market's getting a bit too frothy. Price has gotten ahead of time. Usually takes a little longer to rally like this. Going from 560 to 660 or 670 almost in a matter of a few weeks has been a very dynamic, rapid, parabolic almost move for the entire tech sector, particularly, again, those semiconductor companies. When we get a situation like that, oftentimes we start to see some slowdown from tech as people get a little bit worried that they're buying too high and maybe some rotation or a market dip. Will the cancellation of the meeting in Pakistan lead to a market dip or simple rotation or just a continuation as we just ignore the elephant in the room? That's to be determined. We'll see tomorrow morning how the market wants to react to this. I think ultimately everyone expects things to get worked out with Iran, but the longer it goes on, the more questions start to arise. And where it's really going on is it's just no progress, nothing changing. And so that's my concern right now is that there's nothing changing. If at least we were meeting, we would know what the terms are that need to get us to some meaningful progress. Now, small caps aren't moving much. A lot of the small cap subsectors, things that are dominant in small caps like financials or healthcare or energies just simply aren't running higher right now. As a result, small caps out of focus, focuses on tech. But there are opportunities out there that are starting to pick up, especially with the implied volatility for the market getting low. 19, 18 and a half would not be considered low under normal market conditions, but with an outlier potential fundamental geopolitical input out there, it seems like the market just doesn't have a lot of fear in spite of it. And frankly, the market hasn't been moving much to illustrate that fear over the last couple of weeks. So, given that there's been no real market reaction recently that indicates a need for fear, the market's starting to let it go. Rolling up puts. So we're seeing out of the money puts get cheaper and cheaper. Not selling calls aggressively yet. So we're not seeing that buy right effect that often happens. That would push the VIX even lower, but it seems to be right now that the majority of money flow is just about if I've got a put, I'm either selling it or I'm rolling it up to something a little bit closer to at the money. So we'll see what the week ahead brings. If we start to dip, we may start to see some increased volatility, some increased fear. VIX in the 20s or even up into the 30s, depending upon the magnitude of the move. The recency is all about a lack of concern. But if we go back a month, there was concern. Will that return? That is the ultimate question. And I think the longer things go on with Iran without any meeting or any meaningful progress, the greater the risk that we start to see some increase in fear. Absent that, following the AI signals, we got a bullish signal in Walmart on Friday, and so looked at that one and decided, you know what, this looks like one of the opportunities that could turn into something really dynamic. Broke out above the prior earlier April highs on, lightly on Wednesday, really on Thursday. And then we dipped back and found that support still at that same level. So it looks overall fairly bullish still. Took that opportunity to buy into the dip on Friday with some May 132 calls. Now, if we retest the highs from February, those calls can become a home run, 100, maybe even 200% type return. A simple bounce back, and all of a sudden it's a 50% return. So the leverage is there. Now it's up to the market to determine if that breakout was real on Thursday and if there's continuation here into the next week. So we'll continue to monitor that this week, look to maybe take a little bit of a profit if we get back up towards the highs of last week or a little bit higher, and ultimately close the trade at the end of the week if all goes well. But it looks like a good signal. The AI signals have generally been pretty good. So we'll just continue to monitor them and try to trade them opportunistically in spite of the elephant in the room, as I mentioned, for this big situation with Iran and the impact on things like oil prices, which Walmart's a little bit immune to. Overall, we're still seeing good opportunities in the live trading room. Again, we talk a lot about these earnings trades, and there's a lot of earnings going on right now. We got a lot of big tech earnings again this week. The Alphabets, the Apples. These are trades that could have some really interesting opportunities. So I do urge you to jump in with us. Join us in the live trading room. We'll talk about what's going on geopolitical risk, earnings opportunities, and any other stuff that you'd like to have evaluated on the AI or anything like that. You can always ask us. If you have any other questions about trading in general, options, etc., we're always happy to talk. 9:15 till 10:30 in the morning Eastern for the morning bell and 3 to 4 Eastern for the closing bell. Vlad and I basically alternate, so you get an opportunity to talk to Vlad about AI as much as you want to pick his brain. Of course, my background is much more focused on the options leverage and utilizing these signals for some really exciting leverage type returns with the defined risk of options. So if you have other questions and can't join us in the trading room, you can also email us. I'm Keith at yellowtunnel.com and Vlad is Vlad at yellowtunnel.com. Thanks again, everyone, and looking forward to another interesting week in these markets.